Pratik Agrawal, Chief Investment Officer with ASK Investment Manager, joins us live from his Mumbai office. Pratik, morning. Thank you for joining us. How would you dissect yesterday's price action? Do you think best part of the summer is now behind us, and in the near term, Indian markets have hit some kind of a wall?
Yeah, so in terms of valuations, we were inching towards average valuations, not that the levels are not sustainable. It's just that in terms of domestic macro, domestic numbers, things were not looking any better in this quarter versus earlier quarters. But you have to look at commodity prices which are still softening while liquidity in terms of flows to the equity markets continues to be good. So that bit of positivity in the macro remains, but in terms of corporate numbers, the sectors which continue to do well, that narrow section of the market continues to do well. Most other part of the market have not shown any traction even in this quarter. So it continues to be a narrow market. If you look at yesterday's market, once again, while over the last 15 odd days, quality part of the market did as well as the other part of the market. But yesterday, the momentum part of the market really cracked, while the quality held up much better. So that is, I think, the key takeaway. The scenario continues to be extremely volatile. It is best to focus on high quality businesses going forward as well.
So Pratik, what is your sense? I mean, is this just the start of a slightly deeper correction what we saw yesterday, or is it just mere profit taking because we had run up for the last 4 weeks non-stop?
So at this point in time, I would want to believe it is profit taking. Maybe it is some short-term liquidity constraints which have hit the markets, but and longer-term things should be okay. Key to look at is global flows of liquidity. If that tapers off, then Indian market, which is basically showing strength only on account of global flows, would show significant amount of weakness. So we have to keep an eye on global flows.
I think but global flows yesterday were not bad. Let me just throw some data at you. Foreign institutional investors were net buyers in the cash market to the tune of about 316 crore. And on an aggregate basis, there were net buyers in the F&O market to the tune of about 748 crore. So foreigners were buying, who was selling?
Domestics were selling, they sold 500 plus crores. So that has been the problem. Funds have been getting outflows. Liquidity has been tight overall in the system. So if you look at what kind of monies banks are borrowing from RBI, it's a very high order. So that is why even if you see a lower amount coming in from overseas, the market doesn't hold. You need a particularly large amount to come in from offshore for markets to hold at these levels. Second, yesterday we had two results which did not go well. Both index companies both cracked quite a bit. So that has its own technical factors which have to be taken care of.
Okay, flashes on your screen from the governor of Bank of Japan. Well, yesterday everyone blamed it on BOJ for yesterday's market mayhem in Japanese stock markets. Well, the BOJ has clearly communicated that in the near term they are committed to change the monetary dynamics of Japan from a deflationary scenario to an inflationary scenario, and the only way they can do that is to print more money. So if you decode the comments are very clear that in the near term or maybe in the medium term, Bank of Japan is unlikely to change their monetary stance. If that is the case, then weakness in yen could make a comeback. Pratik, how would you like to interpret the latest round of communication from BOJ? Are you in sync with my interpretation?
No, I think they are talking of an inflation targeting kind of a policy. So they still have a long way to go in terms of pumping money. But if you look at the commentary given by various trading desks, they are talking of yen stopping to depreciate, maybe appreciating a bit in the immediate term. I read a number like 98 to a dollar versus 102 to a dollar. So that is causing one round of profit taking for sure if you want to understand really short-term movements in the market. I think the bigger two reasons are, one, the fact that China PMI did not come out too well. Second, the US, somebody talked of lowering the amount of bond purchases they do every month. And I think that is what is causing most of the trouble in markets other than Japan. If you look at the flows that have happened into India, our understanding is that most of it happens from US, to some extent from Europe. Japanese investors have been actually pulling out money from India. In terms of overall global flows, most of the flows are going to the US and Japan. So technically, theoretically, if Japan doesn't do well, it may just cause evenness of flows to other markets, and that should be positive for us. But fact of the matter is, yesterday US talked about also lowering the amount of bond purchases over a period of time. That I think spooked many markets.
I know your compliance does not allow you to talk about individual stocks, but broadly, if you have to understand the tone of State Bank of India numbers, they were bad. So based on State Bank of India numbers, can I safely assume that in the near term, the premium for private banks will only expand?
One way to look at the banking space is to look at who is retail oriented and who is corporate bank. I think market is paying a much higher valuation for banks who are retail oriented versus who are corporate focused. So market suspects that because of the slowdown in the economy, the corporate focused banks may see a lot more pain going forward. If you look at the distinction between public sector banks and private sector banks, I think private sector as a pack has done much better in terms of controlling NPAs. They probably have better assets as collateral when they have lent, assets which are more readily liquidatable versus in general PSU banks. If you look at the numbers, State Bank probably is the best amongst PSU banks, and it shows those kind of numbers. Most of the PSU banks actually, if you look at the NPA numbers, the total NPA numbers, and compare it with the net worth, most PSU banks, barring frankly one, which is State Bank of India, have higher net NPAs than net worth. So, what are we trying to buy? So, while on the other hand, the worst private sector bank in terms of total NNPA to the net worth number would be like 20%. So, clearly, I think private sector banks are getting their act together in a much better fashion versus public sector banks. That's the part of the market which we are focused on. And I would expect would continue to do much better than the public sector part.
Pratik, as we approach the next few days or month actually, what's the bigger worry right now? Global cues, or do you think domestic factors like disappointment by way of some of the key earnings, or for that matter rupee, which headed to 56 could cause a mammoth of correction?
No, I mean, if you want my views, then I am not positive on the rupee. Frankly, I don't see too many businesses in India to be very competitive at a higher rupee. Our biggest and most scalable exports have been software, and look at what has happened to entry-level wages there. For good 8 to 9 years, there has been no scale-up in entry-level wages, which basically means inflation adjusted, they are cheaper by a factor of 50%. How long can it go on? And if rupee, for example, starts to appreciate, the margins which are already starting to droop a bit would fall much faster. So, and secondly, you try and look at agri produce, which is a place where we always thought we are very competitive. Now, last year there was a shortfall in wheat production globally, and yet from our storehouses in Punjab, government had to actually give a subsidy for us to be able to export that produce. So even in agriculture, in a commodity where we are supposed to be very, very competitive, we at current prices we are not exportable. So where is the case of rupee staying stronger? On a trade parity basis, my sense is we cannot hope for a stronger rupee. Maybe flows make it strong in a short period of time, but overall it may just start to be a bit weak.
Are you still holding on to your farmer names? Last time when we interacted on this forum, you were of the view that buy farmer stocks are growing, margins were strong, and then earnings visibility was also powerful.
Yeah, so we continue to hold on to our pharma pack, we continue to hold on to our consumer names, not to be confused with only FMCG, domestic consumption stories. That too small ticket consumption stories, what people buy in tier 2 towns and villages, and we continue to be focused on emerging market stories, businesses which export into emerging markets rather than developed markets, and some of the stocks which benefit from reforms that the government has initiated and we believe would benefit in names in the media space and in names, let's say, the power financing space.
You've given me a broad sketch, but fill in the colors. Let's be specific here.
I have been as specific as I could be, but yeah, in pharmaceuticals, focused on businesses which are large, strong, have a good base in India. So we are not looking at only export-oriented generic players. So they need to have a very strong presence in India. That's the base, and focused on the US markets because that's where you get maximum bang for the buck. So all of our names are that way. We are not into names which focuses on markets, let's say like a Brazil or CIS or Indonesia. They're very, very US focused for pharmaceuticals.